Oh, my dad's there. Okay. Okay. One more minute. Okay, I'm going to get started here. All right. So this is the fourth session of our little series. Thanks to all of you for showing up for this one. Um, I want to start today with just a little disclaimer because we're gonna talk about more specifics today, and I just want to be really clear that I'm not giving financial advice. I'm not making a specific recommendation. My purpose here is to share my opinions and hopefully educate. So I just want to say that specifically because I think a lot of what you're going to see is stuff that is often used in financial analysis, and I do not want it to be misinterpreted. um, I want to start today with a tweet that I just came out yesterday from Robert Kiyosaki, who is the author of Rich Dad Poor Dad. And so if any of you kind of read business books and those sort of things, you probably recognize that name in that book. And I was somewhat shocked, but in a pleasant way, by this tweet. And his lesson, are you nuts? Why save money? He's implying, like, in a traditional sense. Why put money in a savings account or a money market or a CD when quantitative easing fed counterfeiting is printing trillions of fake dollars, going from 82 billion a month to 125 billion a day? Why save when zero interest rate policy means pays losers zero? Save gold, God's money, or Bitcoin, people's money. I was really surprised by this, but in a pleasant way, because it shows an opening in some of the quasi-mainstream thinkers to the concept of cryptocurrency and it being a safe spot relative to investments in the regular portion of the economy. I'll also say that certainly I think in part because of these classes, and because of what I do, but I've had I've had a surprising amount of interest, and inquiries at a personal level from people, of all different socioeconomic strata in the last days, saying, "Hey, is this a good time?" And kind of soliciting advice and soliciting some opinion at a personal level. And uh, the interest level is high. I think people's fears are high, rightfully so, but behind what's going on with the Fed, what happened with the market, maybe some disillusionment with the market, concerns about the long-term strength of the dollar, and some things are opening up. So um, I think this is a very good segue. Um, the other thing I want to point out is inside kind of the cryptocurrency circles, there are lots of rumors circulating. May or may not be true, who knows? But they revolve around what's typically being called the Fed coin. And we already know that numerous other countries are developing what are called central bank digital currencies. It's kind of the government response to cryptocurrency. And just in the last week or so, the US Treasury hired the chief legal officer, away from Coinbase, which you may have remember is they're a $8 billion exchange, the most prominent one here in the U.S. at least, for the buying and selling of cryptocurrencies. And very surprising move for the government to go out and pick a guy like that and tap him in. He basically is in the number 2 role within the U.S. Treasury now. So what's that's fueling, as well as some other things coming out from Capitol Hill, even coming out of the mouths of people like Nancy Pelosi, that the U.S. needs to fast track some sort of Fed coin. You might say, well, why would that be? Well, there's a couple reasons. At least I will speculate a few reasons. The first one is that if you want to inject money, into the system, there's a much faster way than through the banks and through checks sent to people, and that's through a cryptocurrency. To a certain degree, the Fed can do some of these things electronically already, but for the money to flow out into the system takes more time. With a cryptocurrency, it can happen almost instantaneously. But the biggest thing I think going on is if the Fed implements a negative interest rate policy. If you think about that, so we'll back up that for a second. Let's say the Fed goes to something that results in savings account having a negative interest rate of 1% annually. Well, that would mean if you had $100 in a bank account, at the end of a year, you would have 99. And if you never touch that money, eventually it would all go away, right? Or it would approach zero. Technically, it would never go away. But if you do that and somebody else has a $10 bill and they don't cash it, well, he's a $100 bill, somebody else that's holding a $100 bill would still have $100 at the end of that year. So what it would mean is that there'd be a massive run of money out of banks, right? Who would want to keep your money in a bank when it's going to cost you more than cash? So if cash is still in the system, that would be an inhibitor. So the idea is that the Fed maybe wants to do a Fed coin, and we may not be far away from hearing a cash call basically turn all of your cash in, much like we did in 1933 when the Fed basically made it illegal to hold gold. So all that money got cashed in. They also did it on the something similar on when we changed off of the gold standard, and we went from gold certificates or silver certificates to the Federal Reserve note that we have today. So anyway, it's a very interesting thing happening. Now, the other thing that's going on, and we'll kind of lead into some of our talk about other currencies, is that there's a belief that if the US went to a policy of having a Fed coin, that it could jeopardize the dollar's status as the global reserve currency, and that other governments who hold lots of US dollars in reserve would not be so comfortable if a centralized digital currency were held by the Fed, and that there'd be a lack of trust in those assets being in a centralized server, on a centralized system. And that the only way other countries, would have any level of comfort with that would be if a side chain was created whereby international settlement was done on something other than a centralized blockchain. And Ethereum is really the only one in its smart contract capability that would have the ability to become a settlement network for for international purposes. So again, these are just rumors and suppositions, but I think there's enough there to give them at least, you know, credence to put thought in them. And whether they come to fruition or not, I don't know, but it definitely is showing a direction that I think we all have to pay attention to. So does anybody have any questions on that? Because I'm going to kind of take a turn here and we're going to get into some very specific cryptocurrencies. Questions or comments kind of on this macroeconomic situation, global currency situation. Okay. I'll make sure I'm not missing anything here. Okay. All right, we'll move forward then. Okay, so we're going to talk about some specific cryptocurrencies now. We've spent a lot of time to talk about Bitcoin. We're going to close with Bitcoin, but before I get there, I want to talk and do some justice to a few others that are out there that are either popular or that I think are worthy of paying attention to. The first one I'll bring up is Ripple. So Ripple is it's kind of the uncryptocurrency. So as you can probably tell, whether it was from Robert Kiyosaki's quote of "this is the people's money," or even kind of the things I've talked about freedom in money and those sort of things that center around the Bitcoin momentum and some of the other coins. Ripple is kind of the opposite. Ripple is an attempt to kind of acquiesce and bridge the cryptocurrency community to the existing infrastructure, existing financial infrastructure in the world. And as you see down here, one of the things it does, which I think is very valid, is the SWIFT system, which is the SWIFT is the system by which money transfers occur, international money transfers occur, and it's a slow process. It's cumbersome. It's not transparent. It's expensive. And there's it does work, but it has a lot of deficiencies. So Ripple is kind of coming in and saying, hey, let us replace this SWIFT network and really help manage money between these. They've been in business since 2013. They have a pretty credible client base. There are roughly 3,000 financial institutions around the world that will work with them. And moving money between those 3,000 banks, which include a lot of the biggest banks in the most important countries around the world, and even some of the lesser countries around the world, appears to be very, very solid. As I said, they're kind of the anti-cryptocurrency, though, because one, they're following kind of all the rules. So they're very compliant with everything that revolves around KYC and AML, and they're not kind of pushing back at all. They have a very centralized system by which they operate, meaning that even if at some point a large government in Europe, in the US, China, Japan, somebody like that says, hey, Ripple, we don't like the way that you're operating, we're going to shut you down. They are very shut downable, if I can make that a word. However, the reason I think they have merit and are worthy of at least mentioning when you talk about things that somebody might potentially want to invest in is that they are they have traction right now. And I think in the long run, other cryptocurrencies are going to present issues for them. I think the banking system itself might push back. I think what's happening with some of these central government, central bank digital currencies might present a threat, but they've got 7 years invested. It works. And I think over the next couple of years, at least, it could be very, very exciting. You'll notice that it trades at about 17 cents today. That was a quote I pulled yesterday. It's been as high as about 250 out in here. and it's kind of slowly drifted down here over the last year. So, it trades at a really inexpensive price. There is some volatility in here. I do want to say before I get in any further too that, I am not a trader. I don't believe in the cryptocurrency world that, that anything beyond luck will dictate whether or not you make money trying to day trade and buying low and selling high and shorting and longing and all that. There are so many factors that I don't think anybody can really predict very short-term windows well. There are a few possible exceptions, but so we got somebody. Let me see. We got somebody with some background noise there. Let's see here.
So this one is, it has the phone number on.
Okay, but anyway, I think Ripple presents a very interesting opportunity, and I actually don't own any right now. I have owned it in the past. I think it's very possible I'll own it again in the near future. But if I do own it, I'm looking at probably a 1 or 2 year horizon in terms of a hold. And if I got a nice spike in there, I'd probably take it. I probably don't want to hold it in the long term. Now, Ethereum, we have mentioned before. Ethereum is the number 2 coin in the world. It has a massive infrastructure. It has both in terms of its mining infrastructure, the number of developers working on it, the number of applications that are being developed for it. This is that whole smart contract complex that we talked about that I think will fuel business-to-business transactions. I just mentioned it earlier that if such a thing as a Fed coin or some sort of intermediary to take multiple central bank digital currencies and find a decentralized form that's not controlled by any one central government, this is the most likely candidate. And I don't think it would be a surprise to anybody that if such a thing happened, it would have a phenomenal impact on the way that the world viewed how much Ethereum was worth. So just to kind of go back though a little bit, so Ethereum is the world's computer is the way it's often phrased. It's a protocol that has its own programming language and infrastructure built for smart contracts. Those smart contracts are very powerful. They're in use today. They work well, and businesses globally, large and small, across all kinds of industries, have big efforts in trying to use these. It does have some technical challenges as it tries to continue to scale. So it's not a slam dunk. While it works well today, it has to continue to grow and provide enough robustness that it can handle these bigger volumes. I think the team working on it is really good, and I have a lot of confidence in it. I'll also say that it is, in terms of the government, the CFTC, which is the Commodity and Futures Trading Commission. It's kind of the SEC. It's the SEC equivalent, but for things like commodities, has already recognized it as a commodity. Only Bitcoin and Ethereum, meaning that futures trading can occur on it. So you can buy puts and calls and derivatives and all kinds of other things that have been developed for Ethereum, and you'll continue to see that grow. So Ethereum has had a high of about $1,400. This was kind of, may have talked about this a little bit, but probably not enough. But there's a whole thing that happened in cryptocurrency in late 17 and early 18 that drove prices way up. And there was a big crash that fell. big crash in here. For the last year or so, you'll see reasonable stability here, although this still represents a band of probably 100-ish on the low side right in here to about 330 here and here. It's trading pretty low right now. Earlier today, it was about $140. And what can I say? We in my company Divi, we build Ethereum mining machines. We hold a lot of Ethereum. In rough terms, it's roughly a third of the cryptocurrency that we hold. So I have a big investment in it, a big motivation for it to succeed. And you know, if so I have to be careful what I say because I don't want to give advice, but you know, Ethereum is one of the two bedrocks of cryptocurrency. And you know, I would say somebody putting together a portfolio that wanted to have some diversity, maybe that didn't go all in on Bitcoin, I would say most of those people would probably stack a little bit of Ethereum into that portfolio as well. Now, one that's not on the market yet, but that's in development that I'll call your attention to is called Filecoin. And the concept behind Filecoin is that there's a whole bunch of hard disk space all over the world. Most of you are probably watching on some form of a PC right now, and there are probably several hundred gigabytes to a terabyte or more of data on almost everybody's computer that's sitting there vacant. Well, there's a group of people who have a lot of concerns about, again, from a privacy perspective, about what's going on in big data and cloud computing today. So what you may not know is that the data that you have, whether that's your photos, whether that's financial information, presentations, videos, whatever, most of that sits in the cloud today, or it's at least replicated in the cloud for most people. And what is the cloud? Well, the cloud are these essentially data centers that are run by essentially three companies: Google, Amazon, and Microsoft. Roughly 80% of all the data in the world sits in data centers owned by those three companies. And I think as many of you probably know, if you take Google as an example, but I'm not picking on them exclusively, many people have a lot of concerns about what they do with that data and how that data gets used and where privacy lines are. And you know, there's just a lot of stuff going on out there that worries people. And you know, I'll never forget the time I had just moved to Florida, and I was talking to my son, and I mentioned to him that I needed to buy a fishing license. And within an hour, that was just verbal, by the way, a verbal. I didn't type it. I didn't say. I just verbally said to Alex, "Hey, I need to buy a fishing license." Within an hour, I was getting pop-up ads and ads via Facebook for where to get a fishing license, and it was very scary. Like clearly somebody was listening, and this is not exactly what I'm saying here, but I think we all know that these data centers are owned by companies. And so anyway, the idea behind Filecoin is that if you wanted to take your personal data, you, instead of allowing it to go into the cloud, you would go into the Filecoin file system. And what would happen is Filecoin would spread your data out across thousands of hard drives all over the world. It would replicate the data 8 to 10 times over, so that, for instance, if on my notebook, my notebook was part of the storage power um, of the network, and somebody was storing their files on it. If my computer wasn't on at a given point in time, or it broke, there would be multiple other places where that data would sit and could still be retrieved. So they're building a massive network of it's essentially decentralized storage, always available. Phenomenal group of developers working on this. I think there is an uh, almost innumerable number of people and businesses interested in this sort of technology, and they're scheduled for launch in Q3 of this year. I am very excited about it. Full disclosure, I'm looking at the possibility of building some hardware that could be used on the Filecoin network um, as well. But I'm a huge supporter, and if that idea of a competitor, a decentralized competitor to the cloud storage folks is interesting to you, then Filecoin would be somebody to look at. I'll mention 4 others in a little less detail. One is Monero. Monero is an older coin. It is the ultimate in privacy. And so if you want to do some sort of transaction and you want to be guaranteed not only that it's anonymous, that I sent money to Joe Smith, but when I sent it and how much I sent to him, that still done in a decentralized way, still done in an immutable blockchain, but one that is not known to anybody. Monero offers that feature. And by the way, it's very easy to move money back and forth between, let's say, Bitcoin and Monero. So it's very easy to envision a world where Monero supports the efforts of people that are primarily in other coins, but on occasion they'll move money to the Monero blockchain, do what they want to do, and then move money back if necessary. Should Ethereum ever fail, if some technical issue comes about in the way that they are implementing their infrastructure, there's a coin called Algo that has a pretty reputable group of people working on it, and they're kind of a hedge against Ethereum. Chainlink is another coin, and what they're doing, we talked about the importance of the smart contracts in the previous one, where you have a contract. I'm going to pay somebody a certain amount of money when certain events happen or when certain data becomes available. Well, Chainlink has built an infrastructure to feed data into smart contracts, highly reliable data source for that. So if you like the idea of smart contracts, if you think Ethereum will be successful, then Chainlink might be one that you'd want to also invest a little bit of money in, because it is a supporting piece of that. The last one I'll mention is tonight is called Handshake. And there's an idea of unstoppable websites and unstoppable domains. So in very quick terms, while the web itself is kind of the Wild West out there, it has certain issues. And you may have seen things where, for instance, Mark Zuckerberg from Facebook had to go testify in front of Congress, and they're beating him down, all different things. But one of the things he's been criticized for in Facebook, Twitter especially, is this issue of, are they allowing people with certain political persuasions? Are they allowing illegal activities? There are there are all kinds of concerns about that. And these companies are trying to always walk this line about whether or not it's their responsibility to um, um, police content on their site. And they always have to work under the fear that somebody could come force them legally to just shut down. So there's an idea that's gaining a lot of momentum for a new set of domains that would be unstoppable. The data for the websites would be stored on something like a Filecoin, meaning that you can't just go to a data center and delete the files. It would be impossible to delete the files that support the website. And that the way that the domains are managed makes them unstoppable. So the way that the government could the US government could theoretically go to Facebook and say, we're going to grab control of the address facebook.com and we're going to point it to the IRS website. And every time you went to facebook.com, you would end up actually at irs.gov instead. That's within their authority to do that. Now, each country controls a master domain and they'd have to do it independently. So the US could do that for facebook.com, and there's a facebook.uk and a facebook. I don't know, PR for Portugal or .jp for Japan, and each of those governments could do that. Handshake will allow websites to come up that are unstoppable and uncensorable. And that's a very exciting value proposition for a lot of people. And there's a lot of excitement kind of in the cryptocurrency community for those. So, with that, I'm gonna switch back and we're gonna talk some Bitcoin. But before I do, why don't I stop there and ask about questions you guys may have about alternative cryptocurrencies. There's thousands of them now. So if you want to ask me about a specific one and get my opinion of it, I will. If I know about it, I'll tell you. If I don't, I'll make note of it and I can get back to you about it. But anybody have anything they're curious about, like an opinion on?
So with Ethereum, I saw an article like right as the CARES Act was coming out, and they were talking about that being the platform that we'd most likely see federal coin or whatever you want to call it. Why? What is the security behind it? What makes that so special?
Okay, so I don't know that Ethereum would be. I don't think the U.S. government would run a that's what I was in that first slide on FedCoin. I don't think the US would choose the Ethereum blockchain and run it in a decentralized fashion. I think they're going to run it on their own servers in a centralized fashion. But the problem is that, let's just say you are China, okay, and you hold I don't know, what do they hold? 13 trillion. I don't, maybe somebody else knows the number. I don't know what they have in their reserve. Several $trillions in their central bank reserve. So the U.S. government says, well, you gotta turn those dollars in, and you gotta convert them to the U.S. Fed coin. Well, as soon as they go on the U.S. FedCoin site and a blockchain completely controlled by the US government, I think they're going to get really uncomfortable. Also, if they have their own central bank coin, which they will have, and there is some sort of exchange that's moving money between the China Fed coin and the US Fed coin, neither country is going to want to run it on an exchange run by the other country. There's a massive amount of risk in doing that. So the thought is Ethereum provides a platform that can't be controlled by any government. It can't be manipulated by any government, and it's transparent and immutable, and the advanced smart contract structure that it has would allow those sort of transactions to occur. So I think that the thought would be that Ethereum would run kind of an application would sit on the Ethereum blockchain and become kind of the master exchange of all the central bank currencies around the world. So I see somebody's got a little comment here. Let's see. Does that answer your question, Tanner?
Yeah, definitely. Thank you.
Okay. So I know there's a question up here. I'm having trouble getting there we go. All right. If there's a Fed coin, what you think will happen to the stable coin? Well, there's a lot of different stable coins, but I think things like Tether will no longer, like for instance, that's a very popular one, or USDT. I don't think they'll have much value anymore. I don't think they'll go to zero, but I think people will there'll be a mechanism by which they probably trade them in for Fed coins. But yeah, their long-term prospects are poor if that happens. If it doesn't happen, or at least in the time frame in which it doesn't happen, there's a place in the world for a couple stable coins. They do serve a purpose. Okay, anything else on kind of other coins? We'll certainly have more Q&A at the end too if you get one, but any other questions anybody might have? Okay, so we're going to get kind of into Bitcoin here a little more. Oh, one coming in there. James, where is the hardware stored for Filecoin? If the exponential growth of data continues, wouldn't a filing system like this need larger storage capability that may lead to centralization? Okay, well, the hardware for Filecoin is all the hard disks in the world and any unused space in the world. And I mentioned that I'm at least exploring a project through my company. Our thought is we will build specific servers that are just massive amounts of low-cost data storage that can plug on the network and expand the Filecoin system. So the idea would be that anybody could buy in and be part of that network. So if it's done properly, there'll be millions and millions of computers, some with 50 gigabytes contributed and some with petabytes contributed. The kind of storage that exists in data centers, I guess I didn't mention this before. So if you're Amazon and you build a centralized approach to this, that data storage is really expensive storage. It's using what are called RAID systems, typically high-level RAID systems. And then on top of that, it's replicated over and over and over again. So they'll have multiple data centers, multiple locations. So it's really, really expensive stuff. The theory behind Filecoin is that same level of reliability and that same level of service can be provided via decentralized solutions using inexpensive storage. So, how much storage the world needs, it's mind-boggling. You're right, James. As people take more pictures, as more video comes up, certainly financial data, as we're tracking everybody's activities, the data growth is astronomical. The other side to that, to your question though, James, is that if we don't come, I'd almost throw it the other way. If we don't come up with something like Filecoin, I don't know that centralized solutions can keep up, because they just have to keep building more and more data centers, and I just don't know if it can keep up. There is a white paper. If you're interested in the topic, if you go to You do a Google search on Filecoin, you'll see their white paper, and read the first page or two is really all you have to do. You don't have to go into the technical details later if you're not interested. But I think it's the right approach. But again, Amazon and Microsoft and Google aren't going to go quietly. They'll fight this. So, and certainly not underestimating them. Okay, one of the big criticisms of Bitcoin is volatility, and I pulled this chart just before we came on. So it represents, pretty much well, I guess this is yesterday, but represents a pretty short, no, this is today. I'm sorry, this is today. So that part's wrong, because this is what happened today. So between 6,500 and about 7,200 in one day. So it represents about a 10% swing in one day. So when we see 10% swings in volatility, and let's say in equity, people would say, oh, that's a highly volatile equity, and this is not uncommon. This happens on a very regular basis with Bitcoin. In fact, for it to trade within, let's say, a 1 or 2% band on any given day is highly unlikely. It rarely does that. Now, if you compare it, for instance, to gold, here's gold the last 24 hours. And looks like we hit about, 1570 to about 1600. So we're probably in that 3% band. So it really takes, and something like gold, it takes pretty extraordinary events. So a lot of people, there's I should say, there's a lot of people out there that are really strong gold supporters, and they bash Bitcoin. And I don't bash gold. I don't own any, I'll say that, but I wouldn't object to owning some, but I wouldn't own a lot. But I think it's a reasonably safe store of value. But and this is nice because it's not highly volatile in short windows. I would also say, though, if you start looking at longer term, when you examine volatility, volatility over a longer term. So this is Bitcoin. This is that kind of that bump we talked about, late 17, early 18, fell down pretty steady, spent a year kind of in, it was called the crypto winter period. This is called the crypto winter period right here. Then had a pretty rapid rebound and kind of gone up and down some within here. In the last year, it's been as low as about, that actually should probably go a hair lower. That should be about 3,800. And that happened a few weeks ago, where it went from about 8,000 to 3,800. It spent just a handful of minutes at 3,800 and rebounded back up. So if this, for instance, if this was measured in 1 hour increments, it would actually be true, because it was like only 1 hour of time that it spent below 5,000, although in that window it went all the way to 3,800 and came back. So, which, by the way, I don't care about, because when I look at Bitcoin and the Bitcoin I own, I'm a long-term holder. I only care about the long-term trend. I don't care what happens within a given day, other than on certain extreme dips, I may go in and buy a little bit extra, but that's the way that I view it. What's amazing to people, so keep in mind, yes, we see a fair amount of volatility. This represents here about, I don't know, middle of 2013 on. Bitcoin existed back here in 2010, but on this chart with this scale, it's essentially at zero. It didn't have any appreciable value until here. But this chart might surprise you. So while gold is relatively stable in short windows, its long-term volatility is actually amazingly high. In fact, it's so high that if you bought gold in 1980 in this window right in here, so in the early part of 1980, you're still underwater. If you've held for the last 40 years, you are still underwater. And you maybe had one brief period of time where you might have been able to liquidate in the, I don't know, 2010 time period, and at least get your money back out. But the reason I bring that up is a lot of Bitcoin's critics say, oh, if you bought here, you're still underwater. Well, yeah, that's true. But by the way, I can tell you that almost nobody that bought here still owns it. The people that bought here are the same people that sold here. And we'll talk about the complexion of Bitcoin buyers and sellers and that in a little bit. But, gold, again, I'm not a gold hater. I think it has a place. Depending on what you're doing with your portfolio, you may well have a good place for it. It doesn't have a place in mine right now, but if you own some, I'm certainly not telling you to sell it. But don't, when you measure it on a long term, don't think about it as an involatile commodity. It's actually very volatile. I'll also point out a couple other things about gold. One is that it's produced at a rate of about 2,500 to 3,000 per metric tons per year. Now, if the price, kind of like this oil situation we have right now, if the price is way down, you'll see this production level dip down quite a bit. If the price of gold goes up, then we'll see the upper end of that range or even more. So what that means is that the gold money, the supply of gold has a supply and demand factor that is reacting to the price. So those of you who are, studied Keynesian economics in school, they're kind of all these, supply up and or even the Adam Smith stuff, you kind of see people kind of creating these charts, and essentially the money supply is reacting to the price. Well, Bitcoin has a fixed supply, or at least a fixed rate at which it's mined. So we're going to talk about the halving here in a little bit more detail, but when the halving occurs in 45 days, if the price goes up, there will be no reaction on the supply side. For the next 4 years, the supply will stay the same regardless of what happens on price. This is a really, really important point, because it's essentially never been done before. There's really never been a commodity where as demand goes up, that supply cannot respond. So, as you evaluate going forward, there are, if you're looking for a store of value investment, and by the way, this video will be on YouTube. The other 3 sessions are on YouTube as well, so you can refer to this chart later if you'd like. We won't be able to go into all the detail here, but you'll notice that the attributes of gold and Bitcoin, when you look at something for a store of value, it's scarcity, it's liquidity, it's portability. Portability is, by the way, a really big one, which is, in a time of crisis, how can you move these goods, this commodity from one place to another? And gold's actually pretty poor at that. So anyway, these are all my numbers, by the way. You could put your own numbers in if, depending on how you believe it. But, this is what I do. It somewhat will dictate as I have money and where I want it stored. This is a very important chart for me personally. And I'm just sharing it with you for that reason. But I would say this, just like Robert Kiyosaki said at the beginning, I'm not gonna say gold is bad. I think it's good. It has a place in the world. But if you listen to somebody who says gold is good, for instance, and Bitcoin sucks, I think you should take the advice of that person with a grain of salt, not just that statement, but any other statement, because it means they're not really looking at things with the right optics. And I'm somewhat picking on a guy named Peter Schiff, by the way, here with this statement, who makes very, very strong arguments for gold, but also runs a company that sells gold. And I look at almost all his arguments. He's very prominent, by the way, on the the news networks, the MSNBC and Fox News and Fox Business Channel and all that. He's on there all the time and bashing Bitcoin. But I just caution you to understand his motivation before you take his advice. We'll kind of leave the gold topic after this comment, after this chart though. So if I showed you the volatility of the Bitcoin, I showed you the volatility of gold, I showed you how all that worked out. What if we took dollars out of the equation and we said, you know, how much Bitcoin can you buy per gram of gold? And this chart kind of brings those two things together. And you can see that starting in 2010 through the last decade, that Bitcoin has been a phenomenal investment. And even if you throw out this period of time, which, you know, Bitcoin was still in its infancy, so I think it would be fair to say, well, kind of had an advantage in that period. Gold, you've got this very established long-term value, and people are still, you know, figuring out even what Bitcoin was. A lot of the world didn't even know what it was in this period. Okay, fine. But still look at this period, and that it did extremely well. Okay. So we're running a little longer than I thought. I guess I'm good at talking. So I wanna get through a couple things here quickly and then wrap up and give you the questions. So I'm in the Bitcoin mining business, also in the Ethereum mining business. And one of the advantages we have is we have the ability to determine what the cost of production of Bitcoin is and of Ethereum. I'll share Bitcoin with you today. You know, while I will put this on Bitcoin on YouTube, I would ask you not to distribute it. You know, it's not confidential, certainly not under any legal issues if you share it, but I typically don't share this information except for with paying customers, honestly. But I'm going to share it with you guys today for slugging through me for 4 weeks. And that's that the cost of producing a Bitcoin is about $7,000 right now. And there are some places in the world, I mentioned to you that thing about Iran. So if in Iran, a miner was getting free electricity, he could probably, under best conditions, produce it for about $5,000. The price of Bitcoin, you know, as I started this talk today, was about $6,800. So what I'm sharing with you is that as we sit here today, you essentially are able to buy Bitcoin on the open market at less than manufacturer production cost. So if you think about kind of anything else in this world, if you can buy a car and you could do it at a discount to what the actual manufacturer production cost is without profit, like no games, this is not some dealership game, but if I really told you you could buy a car that was on the lot at 30,000, but you could buy it for 18, and the manufacturer real all-in cost, labor and parts was 20, that 18 would be a pretty good deal. Well, I'm telling you right now that that's what's happening with Bitcoin, that production costs are higher than the current price. And if you look at that chart I showed you earlier about the volatility of Bitcoin, and you look at its price over the last couple weeks, what you will find is that the price did not blip below $5,000. If you remember, I'll go back to that chart real quickly. It's not that far back. No, I guess I can't right here, but right in here. This is Bitcoin bouncing between 5,000 and 7,000. So it was at 8. When the market fell, what did it do? It fell to the lowest production cost in the world, just as I predicted, and it rebounded back up now to kind of the unburdened or not unburdened, unsubsidized production cost. So Now, what's going to happen is that in May of this year, approximately 43 days from now, I believe is the date, the Bitcoin mining rewards are going to go in half, and the cost of producing Bitcoin will come close to doubling. So my estimate is that this $7,000 number will change to about a $12,500 number by the middle of May. So it's my belief that, you know, we're very likely to see price rebound in the same manner. This, by the way, is a chart showing there's been 2 halvenings in history thus far. The first one happened in 2012. This is the price curve for the 2 years following. And this is the second one. So nobody knows what will happen with the third one, which will occur right about there. You know, actually we're down in, you know, this chart is a little old. So anyway, that's a very important thing. And there will be another halvening occurring in 2024, another in 2028, and so on. Okay, so so just as I'm planning myself, you know, I'm thinking that we'll see pricing in the summer, probably in this range, 10 to 12. And I'm trying to establish floors. I have no idea what the ceiling is. We'll talk about ceiling in just a second. And that, you know, by the end of the year, you'll actually see production costs start to rise a little more, and then the floor will go up in kind. And so, you know, I'm not making any, as I mentioned, in the middle of last year, the price hit 14,000 at one point. And I'm not in it for this year. I'm not in it to take quick profits in this time period. It's highly unlikely, unless I'm struggling to put food on the table. I would sell anything, you know, it would take my family probably having to go hungry before I would start selling this. Now, there are things that could happen that could make the price of Bitcoin, and now I'm talking about the next, let's say, 3 years or so. You know, what's interesting is this slide I did a long time ago. I did it several months ago, and you'll see an interesting thing on the bottom. But actually, I'll start there. So, you know, one is, you know, black swan events. I believe while there may be short-term turbulence like we've seen right now, black swan events will be positive for Bitcoin especially, and probably to a certain degree for Ethereum. I don't want to predict what black swan events would be for others, but you'll notice, you know, I had, you know, war, pandemic, financial collapse, earthquakes, solar flares, you know, things like that that have big implications. There's 100% certainty another one is coming. And I think as they come, especially if they are things like war or massive destruction, a tsunami that, you know, takes out Indonesia or something like that, or all of Southeast Asia. Well, you know, those things are going to have big events. I'll kind of work from the bottom up. There is a growing and very exciting borrowing and lending infrastructure coming up. I think I may have mentioned it in passing. We don't have time in the course of this, but we are now, through my business, we are making loans in Bitcoin and Ethereum. We make it to a third-party organization who connects us to a borrower who puts up collateral in escrow, and we receive about, on Bitcoin, we're receiving over 5% interest. On Ethereum, we're in the high 3s. So since we're long-term hold on all that stuff, we might as well put some of it to work and gain interest. That interest, by the way, is paid in the native currency that we loan out. We've been waiting kind of within the community anxiously for an EFT, an exchange traded fund. And there are a couple other guys on the call that know more about this stuff than I do, but you know, essentially these exchange traded funds will allow bigger institutional money to flow into cryptocurrency a lot easier. And there are many mutual funds and hedge funds and things like that that are restricted away from investing in cryptocurrencies right now. but numerous approvals have been submitted to the SEC. Nobody's gotten through it yet, but there's big money and big organizations trying. And when one happens, it should open up a flow of demand for cryptocurrency. And the last thing, those of you who were in last session, moving up the transactional speed of the Bitcoin network is a really important thing. And so the Lightning Network is continuing to make progress and allow the possibility of retail level Bitcoin usage on a big scale, for instance, a Starbucks. Now, there's some downsides possibilities as well. The Lightning Network or the ETF could continue to fail. I think it's primarily a matter of time. There's always a possibility of some major technical failure or hack. I think it's a pretty low probability at this point, but it's certainly a non-zero possibility. Governments are going to fight, especially against Bitcoin, and I put that at a 90% chance of happening. So the question is really, can they have an impact? I believe they can only slow it or make things a little difficult on occasion. I think it's too far gone to actually shut it down. But that is again another non-zero chance. And then it's 100% certainty that the central bank digital coins are going to happen. The question is, are they accepted? And a U.S. central bank digital currency would, if they force it and they take the current and force the current monetary system 100% into it, it will succeed by some measurement for sure. But I think if they do that, that jeopardizes the position of the U.S. dollar as the reserve currency of choice in the world. Okay, so a couple other things here. One is some very interesting stats about Bitcoin ownership. So this is a couple months old, but it's going to be pretty true to form. There are about 28 million Bitcoin addresses in the world, and that may mean that does not necessarily mean there are 28 million unique people or entities that own, because the people that own a lot probably own multiples. But you can see here that there's about 106 addresses that hold 100 or 10,000 Bitcoin or more. So that would be, what would that be, like $70 million or more in one address. It's 106 of those. There's 2,000 at 1,000, which would be 7 million, and so on. So you can see that distribution. There's a lot of people that own just a little bit. So this is about a $700 line based on today's terms. Now, I guess I don't have a chart on it, but I'll share what I find to be a fascinating piece of data with you, and that's that of the 18.2 million Bitcoin in the world, there's an ability to do analysis on those coins that can't be done with any other commodity. And the analysis shows that of that 18.2 million Bitcoin, over 12 million of it is sitting in the same people in the same address for over 1 year. So 2/3 of the market is held by people who, when the price went to 14,000, they didn't sell. And when it dipped to 3,800, they didn't sell. That there are people like me that are in it for a long run, and they don't look at $3,800 as a reason for panic, and they don't look at 14,000 as anywhere near fair enough of value to get out. And so when that's the case, and that's a proven case, you only have 1/3 of the market that's turning over. That's by traders. That's by miners who have to sell some of the currency and put it into the market because they have costs they still have to pay in fiat currency. When the drop happened a couple weeks ago, a fascinating thing was analysis was able to be done, and that was to show that a whole bunch of the coins that were new that were being sold went from new addresses to old addresses. So meaning that the kind of the base of people who've been in it for a long time opened their wallets up when the dip happened and they acquired more of it, meaning more of it went into the hands of long-term holders. So what we have now is we have a situation where the liquid supply available for people to buy is getting smaller as a result of that, at the same time that the mining output is going to go down, meaning there's less money supply coming in. So, we should see supplies tighten, and again, there's no way for it to the market to respond to it. This ability, because of the way the blockchain is structured, again, is very unique, and it allows the calculation of something called the realized market cap. And the calculation of realized market cap and realized market price. Realized market price says, what is the average cost of acquisition of all the Bitcoin? And that's $5,800. And what is the realized market cap? It's 106 billion. So what it means is that the current price, so this is data that I pulled as of February 28th. That's the closest I could get that particular set of data. As of that date, Bitcoin was here and the market cap was here. So means there's, on the order of $50 billion in unrealized gains at that point. Now this number has fallen to about 125 billion, I think, something on that order today. But I find it fascinating, and it's just kind of it's an interesting piece of data. It also shows the power of the blockchain and the ability to provide these sort of statistics, because I do not know of these kind of statistics being available for almost any other commodity. Okay, what should Bitcoin be worth? I mentioned it's about 125 billion at the end of February. It was 150 some billion. But just to put that in perspective, if you believe that the total amount of Bitcoin in the world should be at least worth the same amount as all the silver in the world, then, which silver has a market cap of about 800 billion, then Bitcoin should be priced at 38,000. If you believe that the top 10 banking stocks in the world have a value roughly equivalent to Bitcoin, they have a combined market cap of 2.2 trillion, which means Bitcoin would be valued at $104,000. If you believe Bitcoin has the same long-term value as gold, then it should be worth 476,000 per Bitcoin. And if you believe that all the second and third world economies of the world, if their GDPs were all represented in Bitcoin, then Bitcoin would be worth $1.5 million. So again, I want to say I'm not making a prediction here, but I just offering food for thought about whether or not Bitcoin is currently being appropriately valued, and maybe giving you some insight into why would it be that 12 million Bitcoin that were held at an average cost of just over $5,000, why essentially nobody sold it when it hit 14,000. So I want to do something today for those of you that made it through, all four. This is just for the people that are live, by the way. Anybody that watches on YouTube later, sorry, but I'm gonna make you a personal offer, and the personal offer is this. It's something I'm calling "Let's Make a Deal," and you're gonna have the choice of choosing door number 1 or door number 2, and at the end of this presentation, which is just a few minutes away, you can tell me what your choice is. So in door number 1, I will mail you $5 if that's your choice. I will mail you $5. You give me your address and I will mail you a $5 bill. The second thing is I will give you 50,000 Satoshis, and it's roughly $5 in Bitcoin. The only condition is, regardless of which one I give you, I'm going to ask that you hold it until the year 2025. And because whichever choice you make, and I really don't care which one you make, I want a thought in your head about thinking about the long term, and think about what happens to the value of $1 over a 5-year period, and any asset that's valued in dollars, and what happens to Satoshis. And I think if you start thinking that way, it might start letting you see the world in a slightly different manner. I'll also note, for those of you who were not at the last session, the fear greed index is available for crypto. I think it's fascinating. We are sitting at essentially the lowest level ever seen in the fear greed index. And I will quote Warren Buffett here and his philosophy: we simply attempt to be fearful when others are greedy, and to be greedy when others are fearful. And this is a third-party chart. It's not done by me. I don't know if it's public or not, but the group that does do it is highly reputable, and they do a great job looking at all these different factors over here to determine this number. And then in what I think is the last slide, I believe I've come up with 7 scenarios, and we'll call these the end of the decade scenarios. And the first scenario says, you know, everything I told you is bullshit. It's all going to implode. The second scenario is, well, we've reached a certain point. It's kind of got a little niche here. It's used in a handful of transactions for business and international purposes, and it's a little side store of value asset. The third is, well, it's becomes a tool for international commerce and remittance. A little bigger niche on medium of exchange, and it's still kind of a same level of niche as a store of value. The fourth level is, hey, the third world and all these people in Turkey and Brazil and Argentina and Syria and Venezuela really have a need for this stuff and a place to put their money. And so it becomes a material store of value, but it still is difficult to use and find acceptance as a medium of exchange. The fifth is a little more radical. Some countries kind of give up on their own currency and move toward it as their standard. The sixth says, as a store of value, it becomes somewhat on par with gold. And the seventh is, it becomes the money metric of the world and the global currency of the world. Now, you could probably come up with other scenarios, but you can see that there's a continuum here, and based on where you think things might be, I would say, you know, then consider whether or not you want to invest and the level you want to invest based on kind of which of these scenarios you think. I will say this though, except I don't want to give specific financial advice, and I'm not, but I would say, I'll just talk about number 1 and number 7 a tiny bit. If you believe it's all bullshit, you've been through the 4th thing, I don't want to ever hear about Bitcoin again. It's the devil's work, and it's never gonna amount to anything. You still might want to consider one stat and make a small investment. And that stat is that, given that there's only ever going to be 21 million Bitcoin, and the world population currently sits about 7.8 billion people. It would take about $20 to buy what I would call your share of the world's Bitcoin. And so you may want to consider having a small taste and at least own your share of the world's Bitcoin. Now, if you believe on the other end of the spectrum, complete world domination, then clearly the price is going to be, it will explode on orders of magnitude, beyond anything that I could project here, right? It's going to be massive. So you don't have to actually put a whole bunch of your money into Bitcoin, because let's just pretend there's somebody that has $10,000 and that is their net worth. If they took a small percentage of that number, let's say 5 or 10% of it, and scenario 7 came true in the next 10 years, 10 years from now, that amount that they put into Bitcoin would be worth more than the 90 or 95% that they left on the other side. So I would, even somebody comes to me and they're sold as much or more than I am, there's really not a need to go crazy. So because the wildest expectation of the best scenario would only takes a small amount of your money to really make a difference. That's if you're involved now. That could change in a matter of months if certain world events happen. So I'll leave you with that. I think most of you all have abilities to contact me. This is my email. If you want to follow me on Twitter, I am fairly active through that account with my tweets. The statistic I gave you, I have a website coming up soon called btcperperson.com, where you'll be able to track every day how much Bitcoin per person there is in the world. And I see a question coming in. And so with that, I will open up for questions, and let me get that window up. Oop. There we go. Chat. Okay. So we've starting to get some of the answers in. So yeah, you're right. So on the Let's Make a Deal, you can either email me or leave it in the chat. If you decide you would like Bitcoin, then what you'll need to do is open a Coinbase account. If you already have a Coinbase account, then let me know, or if you have a different account, that's fine too. I need your wallet address, or if you're on Coinbase, I need the email address upon which you entered it. If you want a referral, if you don't have a Coinbase account and you want to open one, let me know. I'll send you a referral. You get $10, I get $10. So you might as well use their money a little bit too. So I see Mick and Hendra both are picking the Bitcoin. I'll hang out here. Again, throw in your door number 1 or door number 2. And then I'm here for questions too. So shoot anything you have at me right now. Wow, very quiet tonight. Oh yeah, so James asked about renewable energy, solar and wind for operational cost. James, it has a huge impact, and this is a small group of mostly people that are my friends and family. So I will share something. I was on the phone yesterday and today with a guy at Tesla talking about their battery packs and solar, because we're exploring putting together a project to fund a mining operation, a solar mining operation, where we would put a large solar farm in place, potentially here in Florida, a Tesla battery pack, and then, you know, essentially we're operating for zero. Our operational costs drop really, really low once we have that. So yes, absolutely, James. And if you have some interest in that, we can talk on the side as well. Yeah, it really is. Because if you can absorb the capital costs on the front end, drive your operational cost to zero, James, then you know you literally make money. I mean, that's why I love the mining business, because we make money every day. There's really no other business in the world that does that. You know, other businesses try to be profitable, but I think we're the only ones that can, in a literal sense, say we make money. Hendra, I see your wallet address there, so I will capture that. Yeah, yep. I agree, James. So I will look at yeah, the YouTube link. Give me 1 second here. Just sent it to Janet. A minute ago. So there, to anybody that wants it, there is the YouTube link. It's a very simple channel. All I've simply done is recorded the first 3 shows. I'll put the 4th one up there. And may or may not put other content up on there. So, okay. All right, anybody else? If not, thank you for sticking with me.